Finance Committee meeting to order. Has everyone had a chance to review the minutes?
I'll make a motion to approve the minutes.
All right.
Second.
All right. All in favor? It's just the three of us. Aye. So the treasurer's report.
Good morning.
Good morning.
Obviously, we have quite a bit of material to cover.
Yeah.
I think if we look at our September numbers, we did receive $10,000 billed for $10,000 for Hudson IDA projects because the 708 housing project closed with Galvin on the 30th of September. We have the ability to post that, having accrued it on September 30th, but it looks like we're going to post that in October. So that will bring that $12,500 under budget number up by another $10,000. We anticipate being on budget or exceeding budget by year end on the Office of Community Renewal Grants. And you know, the $7,500 other was kind of a catch-all when we were doing the budgeting. So I'm not sure whether we'll where we'll be on that or not. The grant income for the Columbia County Grant Program ties exactly to the grants that we award. So we have money in the deferred county income account. So every time we make an award and we expense it, we transfer money over from that account to cover it. You know, we continue to accrue the funds from the county for the underlying $460,000 a year contract, the Columbia Forward Program, the broadband, and the Columbia Housing Initiative. So all of those are on target. The interesting thing with the under grant income below the second grant income category, that's the Joe Angelo loan, which the way it was structured at the time it was awarded was as a grant, and it comes so it gets the accountants make us do that separately. Interest income is up. We have worked with all three of our banks, Key Bank, Bank of Greene County, and Community Bank, to get back in the interest earning game. For so long, there was no ability to earn interest that it didn't really matter. And we have you know, jump-started that, as well as part of that process, aggregated accounts into products that the banks have that will reduce our bank fees, which we'll see down below. We do have, the government paid us $3,175 for the delay between the time we filed for our employee retention credit and the time they issued it. We've had loan interest of $59,000 versus budgeted of $58,000. So Martha and Steve are on target with the budget for loan income. We look to hit $80,000 by the end of the year, and then we look to $100,000 next year. I think I budgeted. Membership and sponsorship is down. We have about another $4,500 to book, but we are going to be under budget in terms of revenue under that category. Our other income is primarily closing fees that we charge, or late fees. Again, the good news there is people haven't been as late, and we've waived a lot of closing fees to help people. So but again, it's not it looks like a significant percentage, but it's not a significant dollar amount. In our technical assistance, we are up because of when we budgeted the increase from the government's. When we budgeted a year ago, we didn't know we were going to be getting so much from the SBA, because as you know, we budgeted based on last year's award. And this year they raised us, Martha, it was from 230 to 260
To 275.
275. So on the expense side, we did write off $3,813. And which loan was that one?
Which, where is
Bad debt write-off?
Brooklyn North?
Oh, yes.
Oh, Brooklyn, Keisha.
Brooklyn North.
What I'm looking at there is that may not be an expense, that may be something we take against the reserve account for bad debt. So it may or may not show up at the end. The real estate taxes, when we purchased the property at Route 9H, there was an adjustment for real estate taxes that had to be paid. And even though we're tax exempt, it was just easier to pay the $400 than to figure out how not to. Our conference and training is up. Thanks to Chris's activities around the state. We did not have the housing initiative as defined when we did the budget back in this time last year. And so, again, there's some increase there. Our consulting is down. We haven't used outside consultants as much with Jessica and Chris on board. Our direct programming expense is the annual meeting. That was, once Dr. Urchel said that she would be the speaker, and she was going to have slides. We did spend, I think it was $1,200 to bring in the appropriate technical stuff so that she wasn't doing it with a home slide projector on a tabletop. So we are going to budget a little bit more for that next year. We do need to get a hold of the college to see if the college is available for the annual meeting. At this point, I don't see any other alternative location. Let's bring that up at the board.
Yeah, I wish there was an entrepreneur we could do it with, but you're right, there may not be.
Someone did suggest the falls, but you know, they've had such a rocky road with the town. I don't know if you want
Right.
What about our friends at Basilica? She's on the Regional Economic Development.
Yeah. Talk to her. We owned it. We loaned her the money for the chairs, so we can finally
Exactly.
see how they look.
We're invested in.
And just bring an outside catering. It's tricky.
That hour of the morning.
Yeah.
We could ask, on employee expense, you know, we're, overall, we're $7,800 under budget. If we play that out till the end of the year, that'll be $12,000 because that's what we had for the intern. And the intern we were able to get from the county for free. Our facility, our rent increased in September pursuant to the lease. We're coming up, we've been here 4 years. And we have a 5-year option to renew, which I believe we have to give 90 days notice. My thought would be to get board approval to give notice in January so that, you know, if we do stay, it just continues the 3% escalator on the rent. And I don't think anyone wants to move in our lifetime. So I will recommend that to the board. I don't know whether we get
Go back to cement plant.
get a separate motion. If we go back there, we need to sign. As you can see from the grant expense, it was the $5,000 to CRC plus the awards under the Columbia Forward Grant Program. Our insurance is under budget, even though we did do a review of it mid-year and added some cyber and some employee practice policy. On the micro business enterprise, we're right on budget. We're actually under budget by about $2,500. New initiatives, we're under budget. We $15,000 that we budgeted for housing, and we've only spent $5,400, but we will be spending some additional money when we have our November 1st housing conference. It'll be virtual, but we continue to accrue expense on broadband. And we did spend $15,000 on the workforce program at the college. Office expense. This is one that I continually get, I struggle with. I went back and I did look at where are those expenses really coming from. TechBridge is our computer services company. And they charge us a monthly fee of just over $1,000 a month. Or I'm sorry, $1,500 a month. Just over $1,500 a month. Let me back up. It's about $1,100 a month because this is only for 9 months. But no, I grossed this up to use it for the budget. So this is 12 months of expense.
Yeah.
Projected.
This is total.
Total for the whole year. It's 9 months plus 3 months projected. It's $4,700 for the copier, $3,500 for the down home software, $3,000 for what we call MailChamp, which is the mass email when you send out newsletters and notices. We have two storage units over in Greenport, which rent. We have $1,000 for our Zoom account annually. Click is a software program that we purchase or we rent or subscribe to for purposes of doing payroll hourly to calculate people's hours. Our various Microsoft package, Dropbox files, so we can file share with other people when the files are too big. We do filings with New York State, and we do so that UCC1, other types of filings with respect to the loan fund, as well as a lobbying report. Our SurveyMonkey software, it's Qubit is a service we use. It's $49 each time that we ask for a report, and we can pick a location anywhere in the county, and they'll give us whatever distance we want to determine the demographics within that area. Gary Dake of Stewards had asked me, why are we doing so well at the 9H Stewards? And I put a pinpoint. We did 5, 7, and 15 miles, and 2/3 of the county live within that location. Obviously, you go to Hudson. We did it for New Lebanon, and they're over 100,000 because you get Pittsfield in those circles. You can manipulate it to any, and so we've often used that when a town or even a developer comes in and we want to get a better sense. And it will give you traffic counts, it'll give you income, it'll give you age, it'll give you, the full Census Bureau data. Pitney Bowes is our postage meter. There's an additional Microsoft charge. I have to go back and see why we didn't aggregate that with the one above. We do have a quarterly bill for shredding. We do, because of the SBA loan documents, there's certain things that we do shred. And they, so you can see how we get to the 40,000. There are some things here I think that we can reduce. My thought is if you get 5% of that, you get $2,000 off of that. And then our internet is 1,200, telephone is 4,000, and the office supplies is 5,500. If you take the office supplies and you take 5,500 divided by 8 people, it's $687 per person per year, and I've always budgeted $750 per person per year. So we're we're right on target for what my experience has been in business for 20 years as to what people spend on office buildings. So, when we review all of that, we're $32,000 good. We are projected to be $14,000 under budget. And, I think, the categories where we need more work, and we are working on our membership, particularly building membership going forward as we look out a year and a half when we reduce our income from the county because the ARPA money will be extinguished. And then the other area are in the expenses related to just operating the office. I guess I did miss our other expenses and charitable contributions when we do a memorial gift and bank service charges. We have gotten that down significantly, but those fee reductions only took effect in August. So, they do appear, still appear to be high. And then Andy needs to send us a bill more frequently because there is some outstanding time. And we also did not budget sufficiently for the audit. After we finish this in the budget, I have a discussion about UHY and the audit. Any questions on that?
Does anyone have any questions or discussion? Dave? No? All right. Can I get a motion to accept the treasurer's report then?
Motion made.
Second.
All right, all in favor?
Aye.
Yes. Do you want to go over something else before the portfolio report? or-
On the budget.
Okay, yeah.
So when you, what we've normally done with the budget is giving you the actual for the previous year, the current budget, the projected budget, which is 9 months actual and 3 months projected, and then the budget for this year. We're having an issue with the county IDA from our side because they're not doing any deals. And so we're concerned about the fact that without revenue coming in, to have a fixed fee is making it difficult. Wait, they'll just run out of money. There are several projects that are in the pipeline, but again, they're not certain. What we do with the city IDA is we have a contract where we get $10,000 a year for administrative services. And then we get $10,000, up to $10,000 for every project that they close on. So it's a pay-as-you-go model. What I'm going to propose to both for our board and for the county IDA and the city IDA is that base fee be $1,250 a year, not 10. We'll increase it because it hasn't been increased. I think 12,500. From 10,000 to 12,500. And then we would get $10,000. Well, we get 1% of the fee that the IDA gets with a cap of $10,000. So that both IDAs will be on the same model, and it'll be project driven, not just pay us because we're here driven. When we do that, and if they do one project next year, we're basically back at the same fee. So you can see the county IDA and the city IDA. The only difference is we're projecting 2 projects at the city IDA and 1 project at the county IDA. Office of Community Renewal Grant Administration. We had budgeted $30,000. This year we collected, I think, 12. Jessica and I looked at it, and it appears that, we will be able to get budget on this year. Next year, I'm only budgeting 15,000, so, I think we agreed we could have done more, but that's basically one project. So we could do another project that could be higher, but I didn't want to get too far out there. We assume, well, we did, the county budget is in process for next year, and we do anticipate getting the 460. We will have Columbia Forward income and Columbia Housing income pursuant to the contracts that we have with the county that run through 2025. So, interesting thing on our, it did not include fee income. It was $2,500 so far this year, but I'm not sure why I didn't do that, but add that.
The Columbia Forward is our portion.
Yes, it's $150,000 a year and $65,000 nets out to the chamber when we receive it. The grant income goes away because Angelo will have paid us off by then, so that loan interest and revenue goes away. I do show that because it was only in July that we started to get bank interest back to where we thought it should be. I increased it to 25,000. Divide that by 2%. That means $1,250,000 is subject to earning interest. And when you look at, we have 2 point. On the balance sheet right now, we have I think our bank balance is over 2 million. So
4%.
Well, we get a blend because if we have a CD at 4% for 400.
Yeah.
So, but I think that's a reason. With the CD, that's about half of our accounts earning interest. Part of the issue is with the SBA money, it comes in and we take it right back out. So they don't really want to pay you too much interest on it. And so I think that's a reasonable number. We will not get any more employee retention interest. And as you can see, I've increased the loan interest from the loan program from 82,000 to 100,000. I think that's conservative. Steve has done a report for us that with what we have on the books now, we'll bring in 80,000. And so any interest on loans that are approved and closed in the next 3 months and in the next 12 months will be added to that. So that number is not a stretch either.
Mike, with the us being given the STR program by the county, short-term rentals, will that be an additional income from the county for us, or is there any
I don't think
timeline?
we've gotten that far, and I'm not sure what exactly they want us to do with it, but we would have to have some additional.
When do you think they'll define that to us?
I don't know. The interesting thing to me is I see Germantown's moving forward on their own program. So I would think it would be sometime next year.
Okay.
Other income, I had $10,000 last year. We are not at that level. We're about half of that. So I think that's why fee income had nothing next to it. I moved it all down into other income. So I just cut that. And based on the fact with the SBA grant, it runs from July 1 to June 30th. And so I basically left it at what it was this year because we don't know if we will get an additional bump next year. There's a little bit of risks there because when the Congress approved the debt cap ceiling. There was a contingent of Congress members who tried to reduce the SBA microloan grant program down to what it was previously. And as you can see, that was 210,000. So, you know, we're optimistic. So that number's a little bit, but if we add back in what we think we can get from Office of Community Renewal grants, it's kind of a wash. But I do want to watch that number. We are looking at how we can join with some other industry organizations that are making a lobbying effort to ensure that those funds are restored and sustained, not reduced. And I suspect that we will know perhaps by the end of the year, because I think we will know if they try to, there's only 40 days left on the continuing resolution. And, you know, these were some of the cuts that people in Congress wanted to make as a condition to getting that approved. That brings our income pretty close to where we were last year. The expenses are a little different based on the reality of where we did spending. I increased conference and training. I increased consulting fees. Even though we're only project spending $17,000, I put it back up. Didn't put it up as high as it had been the previous year, but I did increase it. We left the annual meeting at the cost that we had last year. We have the employee expense. I show it going up. And I can go over the salary calculations with you in executive session. Part of it is due to the fact that several employees are now will be eligible for the 401k after being here for 1 year. And so it's not all wage increases. The facility rent, we have next year we'll get a September increase, so that's factored in. Grant expense, I'm assuming we're going to have to do another CRC grant. Even if we decided not to go forward, they're going to have to file a final tax return. So that would be an expenditure for next year. Insurance, you know, I kind of went halfway between what we've been paying and what we had budgeted last year. Micro business expense, I increased it by 5,000. New initiatives, I brought it down from last year's budget, but brought it up 5,000 from where we are now. Office expense, kind of left it flat. Now that I have an idea of where those things are, you know, even if we could get it down across the board at 5%, you know, you're going to save $6,000 or $7,000. But I think we now have a better idea of where it's in computers and it's in rented equipment, and maybe we have to turn the color button off on the copier. Because only do color on Fridays. Nickel and dimes, we're not going to run the place that way. Other expense, you'll recall we had borrowed $100,000 from the EIDL loan, and that's a 30-year loan. We only have to pay back $420 a month, but we're paying $1,750. I don't think we did it so that if we got cut by the county in the second year, we would be in a situation of not having to reduce staff. But that didn't happen, and we're paying it back on a 5-year basis. And so you know, it was 100,000. And right now it's down to 86.9. So we whittled that away. It's at 2.75%. Martha and I talked about keeping it for 30 years and loaning it out at 6, but you know, we didn't think they might not have liked that idea. Other expenses, again, you know, legal, audit and accounting, we did budget for that. So it's approximately you know, where we were last year. Public relations is approximately where we were. I did add $10,000 for interest expense because, you know, the SBA loans, while there's no interest the first year, and we had some COVID waivers that resulted in having it bought down. I just didn't know what the realities would be going forward. So this is a perfectly balanced budget. And happy to answer any questions. And otherwise,
Any questions on the budget?
Well, thank you for this format. I like splitting to, as well as, yeah, and it shows like, you know, 22, 23, I like this a lot. Thank you. And it's nice to be.
because it's a test, right? You can win at the end of the one.
Any questions on it?
I don't have.
Dave, any questions on this?
I'm good.
All right, let's make a motion to approve.
So moved.
Second, all in favor?
Aye.
All right, so we skipped the approval of the portfolio report. We approved the budget.
Right.
Okay.
If you look at that portfolio summary, the first client, we have not received a payment, but we're expecting one this month. In the second case, we have received a payment, and the SBA loan is now paid in full. You can see the balance was $245 and change. Loan client C, that needs to be written off, and we'll be going to the loan committee this month to get approval to do that. Loan client D, we received one payment on their CEDC loan and a double payment on the SBA loan, so they look better. And the final one, loan client E, they were 30 days past due, but they've gotten caught up.
Great. Any questions on that or discussion on the portfolio report? Can I get a motion to approve?
Motion to approve portfolio report.
Second.
All in favor?
Aye.
Aye.
One thing that we are looking at is the allocation, when we make a loan between the SBA account and the CEDC loan fund. We are getting at a point where we haven't been doing the 50-50 that we had historically been doing. We've been doing more of the CEDC loan fund. We do have almost $500,000 to draw down from the SBA. And with the SBA, the loan fund goes out of business if they don't give you the next tranche. So it's important, I think, that we keep getting that money out as fast as we can to apply for the next tranche. With the CEDC loan fund, it only goes out of business if it defaults over time. And, you know, it's up at the dollar level that it would take a lot of defaults for that to happen. But if we put more money out of the CEDC fund on the street too fast, it won't be paid back as quickly, especially if we're doing 7- and 10-year loans instead of 5-year loans. So we have been working, Martha and I and Steve, to find out where is that sweet spot so that we don't put so much money on the street that we don't have any ability to make loans this year, or at least at the same pace that we have made them in the past.
So we should be doing more SBA then.
Well, we should be making them level, but you know, it's a good thing it's a good issue to have. It's exacerbated by me taking $400,000 and buying a CD.
Yeah.
Because the CD doesn't come due till April. And, you know, but at the same time, it may have been a blessing in disguise because it raised the issue for us. Because otherwise, if we had put it all out on the street, we wouldn't have any money to loan next year because this software that we have, Steve can instantly tell us, you know, based on what's out there now by month, by 3 months, by 6 months, by any date, how much is coming back in interest and principal. And so, we do want to get to where we can keep it evergreen. And my guess is it's about $400,000 a year. But we do need to do the sensitivity analysis. That what is it if everything was loaned at 5? What if everything was loaned at 10? Or what if it was split? So that, and the other thing that distorts it is we've never taken any interest out of either of the loan funds. So it's all good news, but by tying up that CD, it made us say, wait a minute, what's going on here? So sometimes, and we don't think we're at a point where we would need to break the CD. And the other thing is, the reason we got more money from the SBA was because we did more loans. And in their fiscal year, we did 1 or 2 loans less this year than last year. So it's just, how we manage between the two so that we're sharing the risk, but also understanding one goes out of business when they stop giving you money, and the other goes out of business if you give out so much money on terms that don't allow you to recoup the money to relent. The other, it's next on the agenda.
How much of the SBA loans are in Greene County? Very much?
Right now, we have 1 loan. in
Just
Greene
one.
County.
We are beginning to market that partnership with Greene County Economic Development.
Yeah.
I don't
Oh,
want
I'm
to
sorry, we have 2.
I don't want to get to the point where they go to the SBA and say, let us run Greene County.
Right.
Although we may decide that maybe. Their loan fund is getting back into the swing. But
So would we partner with them as far as SBA and
Yeah.
our internal loans?
We can only make SBA loans over there, but yes, we can partner with Greene County. They can make a loan from one of their loan funds, and then we can make.
Fill it in with SBA.
Yeah.
And we are talking with them, and their new economic development director is open to those discussions. We did talk about UHY and whether we wanted to go out to bid on the audit. The response was they wanted to stress that we have both a financial audit and a compliance audit. The compliance audit alone takes a week of time, assuming no major changes in the SBA program. The testing becomes more involved as the program grows and new loans are added. The level of work depends on how much help you need from us and the number of audit entries we post. We believe your fee is right in line with very reasonable and competitive, especially in today's market. Our rate per hour has remained on the lower side. The reason we have spent more time in recent years is that you needed more of our help. There are minimal entries and change. If there are minimal entries and changes, we will spend less time. You're paying us in some cases instead of an outside consultant to assist with year-end close. Every year is different based on what you have going on and the number of hours and the number of unusual items. If we spend additional time, if we spend additional scope, we plan to bill it at the agreed upon rate. We always make our timeline and our deadline consistently. Not all firms do that, at least not continuity. They indicated that they would rotate the engagement partner and who would work with Nicole, who's been working on our account for a number of years, along with Matt Vanderbeck overseeing it. Brian Kearns, their engagement partner, and Matt Vanderbeck are leaders of the not-for-profit practice for their firm for upstate New York. They also have to do a quality control review that's built into the fee. We need to try to keep the hours at or below 200 at $155, which is $31,000. And Nicole, she thought that she could get it done between 180 and 200 hours, which would mean 28 to 31,000. Last year it was 37,000, and this year, and budgeted 37.5.
Last year, is it right that you had reached out to see fees of other companies, or we discussed fees?
Well, we had talked about it. We don't have anything that would be documented.
Yeah.
I think we could certainly get a fee rate. The question is, someone coming in, usually you do it for 3 to 5 years. And so, the first year, my experience has been they look at, somehow they figure out what was charged last year, because they look at everything, they look at all the financial reports to see what the scope of work was and what the volume of work. I don't think $155 an hour blended rate is too bad.
No.
And, they do know us, and, we work well with them.
They're thorough.
And they point out stuff.
They
that-
point out,
Well, and, if it was, if there was no tension between me and them, but you want that tension.
Yeah, agreed.
Yeah, I mean, you want to make sure that,
Because their role is oversight.
Right.
So,
And the other thing you see, unfortunately, a lot in this area is I've seen other organizations where they're waiting for the return, for the parish report, the return to be prepared, and they do timely produce.
yeah,
and they're local. I mean, to the extent that they have a Hudson office.
right.
Right,
If
people are local.
you went back out on a bid, you would end up, you'd get a Poughkeepsie, Albany, Pittsfield firm bidding on it. And, no, I don't think you can restrict it to firm.
Yeah.
You do have, Galucio's firm, and you do have Sickler, which just got bought out by RBT. But, and they would be both, there's other competent firms, but I think based on what they presented to us, the real question will be is, we get to the end of the year and they're at 250 hours, and we've got to look next year.
So this doesn't need a motion or anything, right?
No,
No, it's just what we did say, that we were all kind of shocked when they had a $17,000
Yeah.
over budget.
Right,
But that was also because we got more federal money last year, and it triggered an audit that we didn't.
I'd be inclined to leave that a management decision.
Okay,
yeah,
one last thing is, Columbia Green Workforce Investment Board, which I have not been able to find out what type of legal entity it is, because this only came up on Friday. I did find the statute by which it's created. It's the federal WIA law. Jessica serves on the board as our representative. But a woman by the name of Katie Drake has been a longtime executive director. But Katie has been the executive director under an independent contractor agreement rather than as an employee. And we think that may be because they are not any type of a legal entity that has a tax number that could get payroll service to work with them. But Katie's retiring, and the board is in the process of selecting someone to replace her, but that person wants to be an employee. I have called several other workforce boards. In the Albany Rensselaer County Workforce Board Executive Director works for Rensselaer County, and they get reimbursed by the Workforce Board. In Fulton, Montgomery, and Schoharie County, they incorporated somehow as a 501c3, and they have staff of their own. They've asked if we would serve as the fiscal agent for the Workforce Board, where they would set the salary and benefits for an employee, and they would compensate us with a small fee to run his payroll. You all know that I can't say no to people when they ask us, can we help? Andy and I had a brief conversation about it. We do want to, see how the ABO might look at it. We know that our accountants in the past have cautioned us about fiscal agencies, except where we could clear it out within a year. I suggested, since the person that I believe they're planning to hire is in the state pension system, that, you know, maybe Lake County could be the employer, or maybe Green County would do it, but I just wanted to get some thoughts and opinions, you know, and it would be seamless to the outside world. I mean, it would only be someone that was at the meeting or who read our minutes would know that he's on our payroll.
Do they get their funding from the state each year? Is that how they're funded?
It's through federal grants that are passed through by the Department of Labor. I'm not concerned about the funding. It's just, you know, I think he would have to have the same benefit plan we have. I mean, you can't,
So this person will be an employee of CEDC.
under contract to the workforce board.
Interesting.
Sounds a little complicated.
All right, well, stay tuned, but
Yeah.
I didn't want to not bring it up.
And are you gonna appoint a new person when Jessica's not on that
You know,
board
Jessica,
anymore?
you know, well, we were thinking of
Just keeps,
having Jessica, if she was willing to stay as
Stay
a
on that board.
representative there, and then she has a reason to report back to us once a quarter.
great.
And she would like to do that, I think.
Yeah.
And if it gets to be a burden for you, or, you know,
Right, if it doesn't make sense, then it's.
or
Yeah.
you're not reporting
Maybe
back.
somebody in the new role wants to take that on.
But I think, you know, she's, it's not a heavy lift, and I do think it's a way, you know, someday, you know, I don't know that it would be something immediate. but
So Mike, this new employee that would be full-time, they would report exactly to who?
Them.
To them, and they would be under our, okay, that's,
We have to look into it a little further, but, you know, I did put a call into 2 other workforce boards and said, WTF, no.
What are your, can you give your opinion on?
No, my first impression to Mike was that we want to check with the ABO because, and I actually during this meeting, not that I wasn't mesmerized by the budget, but I was trying to see if there were some audits done, compliance reports where they talked about that, because a lot of times that's where you see it when they do a review of an LDC. You know, they look into.
Like the legalities or?
Yeah,
like-
well, we just don't want to get a recommendation 5 years from now
You shouldn't have done
that you shouldn't be doing this because it's not aligned with your mission, and, you know, there's nothing.
You're wheeling and dealing.
Yeah, and there's nothing illegal about it. It's just that in past situations, I've seen them kind of, you know, chastise LDCs for being outside their lane and suggesting that they revise it and get back into it.
And that headline is what people read, and they never find out
The detail.
the detail.
Yeah,
So that would be a concern. Yeah.
If we could have a brief executive session to review
all right, motion to
our
go into second,
compensation.
all in favor, me?
aye.
Thanks, executive, no public, nope,
Motion to adjourn.
Second,
all in favor?
aye. Thank you guys very much.
Thank you.